And this undictated special podcast is brought to you by Futuregrowth. And Zain Wilson, who is fund strategist and a fixed interest analyst at Futuregrowth, joins us to talk about the mighty greenback. Zain, the dollar just seems to get stronger and stronger. What's behind it?
Well, I mean, year to date, we've had probably a 10% gain for the dollar across all currencies, and it's really started to happen probably since the end of July. I think what we're really seeing and what's driving it is the U.S. economy is getting better, banks are healthier, current account balance is getting better, and the U.S. is moving closer and closer to a more normal world, whereas the rest of the world is not recovering as quickly. So it just means there's a lot of support for normalization in the U.S., and that means the market's pricing in a removal of some liquidity, and obviously that's supporting the dollar across multiple currencies.
Why would that be the case? In other words, when quantitative easing ends, that the US dollar should rise?
A very simple way of looking at it, and it's a little bit of an oversimplification, is just a supply-demand story. So when QE happened, it forced a lot of dollars into the system. So there was an increase of supply of dollars, and that meant that the price for dollars went down, so the dollars weakened. And if the market's pricing in QE ending, they're assuming that QE is going to pull out all that liquidity. Less dollars in the system means the price of the dollar will go up, which means a stronger dollar.
That makes a lot of sense. The implications, though, for currencies or other currencies around the world are quite stark. We'll get to that in a moment. What are the implications for American profitability? Because it's a very export, or there are big exporters in the United States.
Yeah. I think American corporates are a little bit more complicated because they obviously have revenues which are generated offshore, but a lot of the time those revenues and profits are kept offshore, so in different tax havens and so on and so forth. But the simple version of it is that if the dollar strengthens too much, export revenues will decline, and if those revenues are pulled into the U.S., then for the kind of capital or the head office of each of those corporates, you'll see lower export revenues, pull down on profitability. But I think it is a lot more complicated because the U.S. is quite a strong domestic economy as well. So there's been a lot of manufacturing pulled back into the U.S. over the past probably 5 years as a result of the crisis. So there's a lot of profit being generated internally. So it's probably a case of certain exporters will be hurt, but not necessarily the whole U.S. economy and profitability for U.S. corporates will tank.
So you wouldn't necessarily expect the S&P 500 index to start falling as a result of the stronger dollar?
Well, I think what you're seeing with the S&P 500 index and equity markets in general is not necessarily a result of the stronger dollar and earnings forecasts being pulled in. It's more a result of what happens to global equity markets when the liquidity is being pulled out of the system. Because we've had a very strong run over probably 4 years now. And there's a lot of concern that if there's no longer QE and not a lot of liquidity in the system and rates start to rise, the alternative assets for equities, so bonds and short-term kind of cash deposits, starts looking a lot more attractive. And it's probably more a function of that than it is earnings being revised.
But bonds are not giving you a great yield, particularly U.S. bonds.
Yeah. So if you had to look at U.S. bonds now, real rates are still negative or slightly positive moving further out on the curve, but they don't offer a great yield. But what happens generally as short rates rise, so if the market starts looking at 2 years ahead, the Fed funds rate will be 2% higher, then the relative value we'll see on a 2-year view and a 2% cash yield versus a 0% cash yield now, set against equities, looks a lot more attractive. So the alternative asset class for equities starts looking more attractive on a forward-looking basis.
And
so the market actually gets, I would say, it's probably getting ahead of itself now and assuming that you're going to have quite a sharp acceleration in the hiking cycle in the U.S.
The other big issue here, and particularly as far as South Africans are concerned, is this carry trade where people have been borrowing very cheap in the United States and investing in a currency where the interest rates are higher. There's lots of talk about this unwinding. What's your thought?
That is probably, I think the last time we chatted, we spoke about that earlier this year. And it's a result of the current account deficit and the fiscal deficit, meaning that South Africa has a large funding requirement. So as long as we continue to have those imbalances and a large capital requirement, we still need foreigners to obviously fund our growth. And what happens with yields in the rand is that as U.S. rates rise and as liquidity gets pulled out of the system, it increases the base for that carry trade. And as the base increases for the carry trade, our yields have to rise in response in order to attract those same capital flows. And if we don't, then that means foreigners will penalize South Africa, and you won't see as much money flowing in, and that obviously puts pressure on the rand.
But surely if you're seeing the US dollar rise, you don't really want to go and put your money into rands if you're a foreign investor.
Yeah. Well, I would also look at it on a longer-term basis, and you look at what the rand has done over the past 3 years and how much it's already depreciated against the dollar. While you've had a lot of dollar strength year to date, the rand has actually held up quite well against other currencies. So this hasn't been a weak rand story over the last couple of months. It's been very much a strong dollar story. And the dollar has reacted quite quickly, and it's moved probably, say, 10%. But in the long run, the U.S. Treasury is not going to remove all that liquidity from the system in a month or a year. It's going to be done very gradually. So I would actually venture to say that given how much the rand has moved over 3 years, you haven't really seen many episodes in the past where the rand depreciates by 30% and then depreciates by another 30%. So I guess in markets, it's times like these when you've seen a lot of value loss that you really want to look for opportunities to actually invest when everyone else is selling. So it might be an appetizing time to start buying the rand.
That's interesting. It's very counterintuitive.
Yeah. Well, I think that's where opportunities kind of arise in the market is when you have a lot of momentum selling. And the rand has done a lot of work. And if you look at it on a across multiple bases for fair value, be it PPP or current account and so on and so forth, if you assume that the fundamental drivers start to improve, and we're starting to see indicators that they're starting to turn. So you're seeing manufacturing exports pick up gradually, and you're seeing consumer imports pull back gradually, which will help the current account correct. If these things happen, which is obviously a big if, then the rand starts offering a lot of value. And the other side to that is if we still have credibility coming from the central bank, then that will give support for the currency as well.
Well, that brings us to the appointment of Lesetja Kganyago as the new governor of the central bank. If you just take a complete outsider's view, he's, in theory anyway, better qualified to take that job than his two predecessors, who were more politicians than central bankers, whereas he's more of an economist than a politician.
Yeah. I think Lesetja has been kind of groomed for the job. He's ticked all boxes. He's an economist. He spent time at the central bank, but at the same time, he's been in Treasury. And before that, I mean, he's got the kind of ANC backing as well. So I think the market is happy that this has happened. The market is happy that he's appointed. We've seen the rand strengthen. So, yes, in many ways, I agree that he kind of fits very easily into the role. And it's a good support for the rand because it's a continuation of the credibility that the central bank has built up.
So that would be a bull factor. But what about some of the strange political stories that we hear coming out of South Africa? Are they not maybe taking the edge off the possible appreciation of the currency?
Yeah, I mean, it's always going to be a function of balancing those different factors. And we had labor union issues in the last couple of years. We've had strikes. We've had political issues kind of starting to come up, starting probably last year with COSATU and conflict internally, and then what we're seeing in Parliament now with EFF. But if you look at the rest of the world, these are not uniquely South African problems. So on a relative value play, comparing us to other EMs, which is what a global currency investor or a global bond investor or any investor is looking at multiple EMs, they'll look at Turkey as well. And there are plenty of political problems in Turkey, similarly in Brazil. So it's very easy for us to get very negative on South Africa on the political outlook, but you have to see it, when you look at currency, you have to look at it from a global investor perspective.
So, Zain, the worst might be over for the rand, and quite against the momentum play, this could be perhaps a time to start thinking of adding rand to your portfolio.
I would say if the dollar continues to strengthen more and you keep an eye on the kind of drivers of the current account deficit, because I still think that's probably one of the most important things. If we start seeing platinum exports coming back online, then I think there is an opportunity to add rands and start buying the rand into dollar strength. But it really does depend on that current account outlook. As long as the deficit stays wide, then it's easy for foreigners to not be sold on the fundamental positive story in South Africa.
Zain Wilson is fund strategist and fixed interest analyst at Futuregrowth, and this undictated special podcast was brought to you by Future.